Good afternoon, everyone. We are live. Well, today we're talking about the quarterly carbon market report, looking at the December quarter 2020. For those of you who don't know me, my name is Shakir Rahman. I work in the economic analysis section at the Clean Energy Regulator. I've got with me Jayanthi Thanakun, my colleague, and we will be talking about the highlights that we've seen in December quarter 2020 and also how our scheme performed in 2020 as a whole. Before I start, a disclaimer that the Clean Energy Regulator is not a financial advisor. The information we're providing today is for general information only. I'd like to start my presentation by acknowledging the traditional owners of the many lands on which we are gathering today, and acknowledge their continuing connection to land, sea, and culture. We pay our respect to the elders past, present, and emerging, and extend those respect to any Aboriginal or Torres Strait Islander people who may be joining us today. We are hosting this webinar from Canberra today, which is located on Ngunnawal and Ngambri country, where traditional owners have been living and caring for country for at least 20,000 years, and we pay respect to them. Okay. So before we start, just to talk about how we will run the presentation today, we'll take you through the highlights from the ACCU market and the ELRD and SHRES markets as well. You can post your questions throughout the presentation. We'll pause for a question after each section and try and answer those questions for you. There is a Q&A section that we'll see on the slide. You can post your questions there, and our colleagues will try and answer them as we go, and we'll also pause for answers throughout the presentation as well. Okay, so to start with, just talking about the emissions reduction that's come from our schemes in 2020. And I'm going to start here because that is really a positive story, and it shows really how well our schemes have performed in 2020. So in 2020, the emissions reduction coming from our schemes amounted to 53 million tonnes of carbon dioxide equivalent, which is an 11% increase from 2019, and that is really showing a growth in how our schemes are performing. 7 gigawatts of renewable energy capacity were delivered across Australia in 2020. And 60 million ACCUs, which is Australian Carbon Credit Unit, were also issued. So that's really contributing to that emissions reduction. And we think that will continue to grow in 2021. Our current estimate for 2021 stands at 57 million tonne. So now moving on to the ERF and the ACCU market. The headline story there really is that the market for ACCUs is growing. We have seen significant development in 2020 with some records that have been broken both on the supply and on the demand side of the market. And we also think that that will continue to grow, the market will continue to grow in 2021. So then looking at some of the highlights in the ACCU market. So this graph here, the first graph here shows supply and demand balance for ACCUs on a quarterly basis. So in Q4, we had a supply of 5.2 million ACCUs, which is the highest quarterly issuance we've ever seen in the scheme. And on the demand side, it was a bit moderate. So we had 3.7 million ACCUs that were delivered either against ERF contracts or for voluntary cancellations. So what that means 1.5 million ACCUs were added to the balance of in Andrew, and that took the Andrew balance to 7.9 million at the end of 2020, which is shown in that yellow golden line there. And as that shows that balance is growing year on year. It is important to note that not all of that 7.9 million ACCUs is available to the market, because a lot of that is being held either by safeguard entities for future safeguard liabilities, and also possibly for by project developers for ERF deliveries in future years. Okay. So this next slide shows ACCUs issued. So just looking a bit more closely into the supply story here. So Q4, as I mentioned, we had 5.2 million ACCUs that were issued, most of that coming from vegetation and waste projects, which is the norm for ERF really. They are the dominant project types. But in 2020, issuance total 16 million, which is a record, and that is an 11% increase, sorry, 8% increase from the 14.8 million ACCUs that were issued in 2019. We think similar level of growth will happen again in 2021. Our current estimation for supply in 2021 stands at 17 million. We will continue to update that as the year progresses if there is any major story that develops in the supply side. Now, looking at the project registration, which is really interesting, and that's really where the scheme has performed really well in 2020. We had 158 projects that were registered. And as you can see in this graph, doing a quarterly breakdown, every quarter registration has gone up in 2020, ending up with 71 projects that were registered in Q4. So the 158 projects, that's, to put that in context, that's 4 times as many projects that were registered in 2019 altogether. So that's a pretty significant development in terms of increase in project portfolio under the ERF, and is really a good lead indicator in terms of future supply that may be coming forward. So our estimation is that for the 158 projects, we'll be getting about 50 million tonne of carbon dioxide equivalent abatement over the lifetime of these projects. Now, the next slide here, we have done a bit of analysis on first-time crediting from projects. So this is an interesting development because it shows that projects that are being created for the first time and how they're contributing to supply. So year on year, as you can see, first-time crediting, so that's project being created for the first time and the ACCUs that are being credited to these projects. The number of projects that were coming online and the volume of ACCUs issued to these projects peaked in 2016 and has since been coming down or going on a downward trend. And that is really reflecting the number of registration that's been coming under ERF. ERF didn't really have many registrations in 2019, and that is really showing why the downward trend has continued in 2020. However, as I just mentioned, 2020 had a lot of project registrations, so we think that will result in that trend reversing. So we expect about 50 to 70 projects coming online or start getting crediting in 2021, issuing about 1 to 1.5 million ACCUs to the supply, and that will continue in future years as well as all these projects start generating ACCUs. Looking at the demand side now, so this graph shows cumulatively the delivery volumes for each year. So 2020 again was another record with 13.2 million ACCUs that were delivered against ERF contracts. And as this graph shows, 2021 it's going to be slightly lower than what we have seen in 2020. And if you have seen our Q3 report and have listened to our Q2 webinar, you'd have seen that 2020 has moderated since Q3, and that is really because there have been some ERF deliveries that has been rescheduled to future years. So 2021 was expected to be beyond 14 million, but it's gone down now because that volume has been rescheduled to future years, and that is something that is allowed under the ERF. And finally, looking at the ACCU spot price. So spot price increased over the quarter, starting from 1610 at the start of the quarter, ending at 1650, 55 or thereabouts. And we have seen that continuing to increase in Q1 2021 as well. And if you've been keeping tabs on ACCU spot price, you'd have seen that it's gone to 1850 in the last couple of weeks, which is really exciting to see and a very significant development. Part of that is being driven by Safeguard entities buying ACCUs for their liabilities, but we'll unpack that a bit more in a future report. All right, so I think that's where I'll stop for ACCUs. That's all our ACCU slides. If you have any questions, happy to take them now. Okay, well, we just may move on to the renewable story now, but please feel free to pose your questions in the chat section and we'll answer them as we go.
Thanks, Shakia. And hello, everyone. My name is Jayanti Tennakon. Let me walk you through the renewable investment, large-scale renewable market, and small-scale renewable market of the QCMR. Here we look at the renewable investment as in terms of capacity delivered and financial investment. As you can see from this slide, in 2020, 7 gigawatt of new renewable capacity was delivered. This is an increase of 11% from the previous record set in 2019. Of this capacity, 4 gigawatt capacity came from the large-scale sector and 3 gigawatt from the rooftop solar PV. From the large-scale capacity, 2.3 gigawatt capacity was from wind and 1.7 gigawatt of capacity from solar. The CR expects 6 gigawatt of new renewable capacity to be delivered in 2021 and 2022. From this, between 2 to 2.5 gigawatt of large-scale capacity will be delivered in 2021, and between 3 and 4 gigawatt of household and rooftop solar capacity is expected to be delivered in 2021. Moving to renewable energy investment from 2015 to 2022, based on the CR estimation, $9.7 billion were invested in the Australian renewable energy industry in 2020. This is an increase of about 9% from $8.9 billion invested in 2019. The CR estimated that over the past 5 years, about $23.8 billion was invested. Of this, $10.5 billion were invested in rooftop solar. 21.7 billion was invested in utility-scale renewable energy power stations. It is estimated that further 12.6 to 16 billion will be invested over 2021 and 2022. Moving to the LGC market and to the outlook for large-scale renewable energy. So the total committed capacity in 2020 was 2.7 gigawatts. This is in line with the CR's previous expectation. In previous QCMR, CR mentioned that CR would expect 2 to 3 gigawatt committed capacity for 2020. The level of commitments has stabilized over the past 5 quarters, as you could see, at around 600 megawatt per quarter on a 4-quarter rolling average basis. The committed capacity in the final quarter of 2020 was about 604 megawatts. This is a strong outcome considering the economic and financial challenges resulting from COVID-19 and grid constraints and curtailment issues. Moving to the pipeline of committed and probable projects. As per the CR's pipeline of committed and probable projects, the total capacity of project backed by a PPA, power purchasing agreement, reached 3.2 gigawatt at the end of quarter 4 in 2020. Firmly announced projects consisting of both committed and probable projects are currently at their highest level since mid-2019, as you could see from this slide. Talking about the LGC spot prices, LGC spot price decreased by about 5% in the fourth quarter from $42.50 at the end of quarter 3 to $40 at the end of quarter 4 of 2020. Looking at the quarterly trends, the typical decline in spot prices in the fourth quarter can be explained by the surrender deadline as liable entities consider their LGC options. As you could see from this slide, from June to October 2020, the spot prices increased. This is explained by the lower than expected LGC supply and increased voluntary demand. So that's all in relation to the LGC markets. If you have got any questions, would be happy to answer. 2020.
Yeah.
Okay. an overview of the STC market. Looking at the annual capacity, an estimated 3 gigawatt of rooftop solar PV was installed in 2020. This is about 40% increase from 2019. The last quarter of 2020 saw a record 950 megawatts of rooftop capacity installed in a single quarter since 2001. This is an increase of 27 from the previous record set in quarter 3 of 2020 of 760 megawatts. The CR estimate for rooftop solar PV installed capacity for 2021 is in between 3 and 4 gigawatts. Between 3 and 4 gigawatts of rooftop capacity is expected. This is driven by strong household demand. Based on recent data available, it is likely that the expected capacity goes beyond the minimum threshold that we have set, 3 gigawatt of capacity. And moving to the solar PV capacity installed by states, this figure shows the solar PV capacity installed by states from quarter 1 2019 to quarter 4 2020. Looking at Victoria, the easing of Victoria's stage 4 COVID-19 restrictions saw a swift return to pre-restriction installation levels. Victoria's installations increased by about 106% in quarter 4 compared to quarter 3 in 2020.
Okay, well, that's actually a good segue to move into the voluntary market, where we talk about surrender of LGCs and ACCUs. So the first slide here is a bit of a busy graph, but it shows on a quarterly basis how many ACCUs and LGCs have been surrendered. So as you can see, I acknowledge that the quarter 3 LGC volume dwarfs everything, but if you can look at the quarter 4 performance from LGCs and ACCUs, that has gone up, and we had a pretty solid quarter for both LGCs and ACCUs in 2020. To put some numbers around it, we had about 460,000 ACCUs and LGCs that were surrendered in quarter 4 2020, which is an increase of 65% from quarter 4 2019. Looking at the year, excuse me, we had 4.9 million units and certificates that were surrendered, and that is a fourfold increase compared to 2019. So that is a very significant growth that we have seen in 2020. Now, looking at the ACCU demand totaled 841,000 in 2020, a 76% increase from 2019 level. And that is really being driven by business and corporations surrendering ACCUs to demonstrate their emissions reduction targets. While ACCUs are being used for offsetting and they are being valued as domestic units, international units are still the more prevalent units that are being used in the market, in the offset market. So looking at CERs, for example, that were cancelled in Andrew, it amounted to 5.8 million in 2020, which is a 30% increase from 4.4 million that was surrendered in 2019. The interesting story there, though, is that the rate that ACCU surrender is growing is far faster than what we have seen for CERs. So a growth of ACCUs from 2019 to 2020 was 76%, while CER was 30%. And we expect that growth to continue in 2021 as well, which will obviously mean that there'll be more ACCUs being surrendered. Now, looking at LGCs, we had over 4 million LGCs that were surrendered in 2020. Most of that, or big portion of that, 2.3 million of that came from the ACT government. So that accounted for 56% of the total volume that was surrendered. But even taking that out, we had 1.8 million that was surrendered in 2020, and that is 2.4 times the volume that was surrendered in 2019. So it's still, again, a very big jump there. And what is driving this is business and companies setting their renewable energy targets, and also subscribing to international programs such as the RE100. Now, the RE100 program, for those of you who don't know, is a global initiative that tracks large corporations tracking against their renewable energy targets. And RE100 does acknowledge and encourage the use of LGCs as a high degree renewable energy unit. So I think so we believe that will continue to drive the demand for LGCs in 2021 and near future. So CER is also helping in driving that demand as much as we can. So one of our recent initiatives is the Corporate Emissions Reduction Transparency Report, or CERT, which is under consultation now, and that will close on the 19th of March. The aim of the CERT is to help INGAA reporters to show how they are progressing towards that emission reduction goal, while also supporting the growth of voluntary carbon market. And there's more information available on our website on that. So then looking at 2021 and what we expect to see in the voluntary ACCUs and LGC space, as I mentioned, we expect both markets to grow in 2021. For ACCUs, we expect that to grow to over 1 million ACCUs in 2021, whereas for LGCs, we expect that to be beyond to be between 4.5 to 5.5 million. So both markets are expected to grow. So I think that's all the slides we have today. So thank you very much for listening. Again, please feel free to post your question or submit your question through our email address, which is markets@cleanenergyregulator.gov.au, and we'll try and answer those. But thank you very much for listening today. We'll be doing this again after our next quarterly carbon market report, which we expect to publish in May 2021. Thank you very much.